following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from knowyouroptionsinc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners are having a fun and exciting trading week. I am your host, Mark Longo, for this strange trip into the world of options.
What a long, strange trip it's been.
And before we get started, I do want to remind our listeners that this show is brought to you by the good folks over at Options Express. And we do have a nice offer for you new customers who are coming on board and want to try out Options Express for the first time. Just surf on over to optionsexpress.com/OXradio and tell them I sent you. You'll get a bunch of free trades over there, and you get a good chance to test out all of these platforms like Extend and some of the other stuff that we've been talking about on this show for quite a while at no cost to you. So again, surf on over to optionsexpress.com/OXradio, and you can try it out for yourself. And then while we're talking in the front of the show here, I also want to encourage more user interaction from our listeners. We have a lot of good feedback already, but we always could use more. And give us a call, 312-544-9356. That is, of course, our voicemail line. And if we get enough interesting voicemails, we will read them on the air. Who knows, as this progresses, we could even develop this into a bit of a live call-in show. We do record this show at certain times every week, and we can have people call in during those times and answer your questions live on the air. So there's a lot we can do with this. So give us a call. The number again is 312-544-9356. And I am joined by the usual cast of characters, starting off with Big Tim Nababi, T-Nob himself. Mr. T-Nob, how are you doing this week?
I'm doing great. The weather is over 30 degrees. It feels like a heat wave. I'm sweating, and, it was a nice walk to work today, so I'm doing great. Thanks, Mark.
In the Options Insider HQ studio here with this massive screen I'm sitting in front of right now and all these computers running in this studio, it is 82 degrees, my wall thermometer is
wow.
So it is quite hot in here.
Yeah.
The Sebastian would have to strip down for purpose as opposed to just taking his shirt off for the show because he likes to. And, of course, that voice we heard is none other than the greasy meatball himself, Mark Sebastian. How you doing, Mark?
Hola, hola, hola. And hello to all.
And rounding out, last but certainly not least, is Uncle Mike Tusaw from Know Your Options, Inc., the man from the mountains himself, lord of bass fishing and salmon fishing, and also somewhat interested in options as well. Uncle Mike, how are you doing today?
Every day's a holiday, every meal's a feast. I am excited to be here as always.
I should also add Lord of Monster Trucks to that title. Your title just keeps growing.
That's true, the man of many nicknames.
All right, and with those introductions out of the way, we will dive right into the trading block.
The trading block.
And welcome to the trading block. This is the section of the show where we discuss what's moving the markets today and what's catching our eye from a broad perspective. And it was another relatively mild day on the street. The S&P closed up 4 points. Dow closed up 30, NASDAQ up 6, and the VIX cash down 0.13. So a relatively mild day. There was some
very much so.
Some initial furor over higher than expected jobless claims and consumer prices, and some thought that might cause a little bit of a sell-off. That never materialized. I think that was mitigated somewhat by the somewhat optimistic, if not extremely bullish news coming out of the earnings. The earnings have kind of been a mixed bag, but generally decent for the most part. People are making or sometimes exceeding their earnings. I know the big hubbub still is continuing with the exchange Tango. And, we talked about it a show or two ago. It started all off when NYSE and Deutsche Börse just announced, to the shock of all, that they were in advanced talks for a merger. And then there was talk a little bit later that the CME was going to dive in and try to break that up and make a rival bid for NYSE. CME is now denying that, saying they haven't actually talked to the NYSE, but that never stopped a good rumor from taking off and getting legs. And now the next step in this seems to be that in a rush to say, us too, NASDAQ and ICE, not ISE, are in, quote, critical stage talks to merge. So this is just
I love that they call it critical stage talks.
Well, they had to put out a press release that was a little bit different from the Deutsche Börse NYSE one, but still the same kind of thing. So they, instead of saying advanced talks, they said critical stage. Other than that, this almost reads the same. What do you guys think of all this exchange hoopla going on right now?
You know, I've been expecting this for a long time. I think, you know, from the very beginning of this podcast, you know, one of the things we talked about over and over again is the fact that we thought there were way too many exchanges. And not just, and you know, we talk a lot about options, but there's too many stock exchanges, too many market makers, too many places to trade futures. You know, we've been expecting this kind of consolidation for a long time. I mean, it's just been kind of natural that you don't need this many places to trade. You need several, you need competition, but you don't need 11 exchanges to trade equity options when you've got the same guys on every exchange. There are more exchanges than there are major trading firms. You know,
right,
that's unnecessary. Sorry.
Yeah, and it's not, sorry to interrupt, but it's not like it's a call option on Google works just as well at the CBOE as it does at the ICE. Obviously, sometimes there's better fills than others. And like you said, I think that you definitely need competition, but you still have the same rights and obligations exactly no matter where you get the option from. So it's not like going with a different – the actual product is the exact same. And so you're right. There eventually just becomes too much.
You know, you need multiple models, and we have that now. You know, we have exchange conglomerates with multiple models within the same exchange. So you need a few different competing models. You have maker-taker, traditional. You need different technologies. You need different customer priority platforms, some with it, some without it. But once you get beyond that, yeah, I agree. The additional fragmentation and the additional ridiculous Byzantine fee structure that comes out of all this, the only people who are benefiting from that are
Nice word, Byzantine. Wow.
You know, we try to throw a few $50, $100 words into the show now and then. We have to keep the level of the discourse high. You know, our audience expects it. And
now, who are the Persians? Who are the Ottomans?
So I think the only people who are benefiting from this ridiculous fragmentation now are the few high-frequency firms who've managed to somehow figure out a way to arb the fees. Other than that's
it's
just
exactly
nonsense.
who's benefiting is that there are people out there arbing all of the fees. And these mergers are going to hopefully force those guys out. Because it was interesting watching – did you see that 60 Minutes thing they did on flash trading? Stop me if we talked about this before. But it was interesting. They sat there and talked to a couple of these flash trading guys. And the guy talked for hours. You know, they must have talked to him all day. And he didn't mention payment for order flow once, which is how a huge portion of these flash trading firms make their money. They're not even making money off of ticks in the stock. They're making as much or not more off of the marketing fees. So it's crazy.
This is very interesting times to be active and watching the exchange space. Obviously, these stocks are moving accordingly. CBOE took a nice pop over the rumors that CME might come after them finally, and they've kind of settled off a little bit now. NASDAQ is moving in as a result of these talks today, and so it's just a lot of – if you're playing options in these names are typically illiquid. They don't really move that much. They don't have that much volatility. So this, at the very least, provides some interesting fodder for options traders in these various names. I'm sure. I mean, just CBOE alone, that name usually does a couple hundred contracts a day. I think it did 11,000 one day last week. So suddenly there's liquidity in these names where none was to be had before. So that in and of itself is interesting. You know, it is also interesting, Mark, that you mentioned these liquidity providers and the high-frequency guys kind of eating their lunch a little bit, because we saw in the other big headline today is that yet another market-making firm closed its doors today. Sun Trading pretty much laid off a bunch of people, and that kind of goes along with a lot of things that I've actually been seeing and hearing. A lot of the guys I still know the handful who are still active in day-to-day market making. The stories I'm hearing from them, it's just getting scarier. It kind of reminds me almost of, in a sense, the late 80s, early 90s, what I've heard anyway, those days, when the style of trading was just when in doubt, palms out. All you did was go out and sell a ton of premium and collect decay. It was a very unsophisticated approach to options. And I'm starting to hear more and more that guys who used to make their living day trading, trading in and out, it's gotten so hard to do that now, and that kind of paper is so difficult to find that it's just, they're going back to the old days again. They're getting short tons of downside, short tons of upside, short tons of at the money, and they're crossing their fingers and taking a lot of tums and going into expiration, hope the thing doesn't blow them out. It's very much old school trading. That in and of itself is a little bit alarming. So I'm not surprised to see more and more of these firms shuttering their doors with just the combination of the ridiculous fees, the high-frequency guys beating down their doors, the lack of any sort of defenses for legitimate market makers, and just the lack of good paper.
No, there is nothing. I mean, it is unbelievable. Nobody is protecting the liquidity providers. At this point, there's going to be none of the independents left, which is really, really, I think, bad for the industry. If you have the liquidity provider and the order flow provider in the same spot, you watch those spreads start to widen out real fast. And at this point, if you're going to make markets in an individual equity, you have to make market on multiple of the. You have to basically be posting markets on the SIBO, the ICE, and probably the Amex, and maybe even the PHLX all at once. So that's how many seat leases, how many different types of fees, how many different types of infrastructures you have to get your system to work with. And then you have to be able to be ready and working to provide liquidity on some of these maker-taker exchanges at the same time. I know nobody likes to take the market maker's side, but the loss of independent market making is not a good thing for our industry. I am almost certain.
Well, you don't want Citadel on the other side of all of your trades? That prospect doesn't give you a warm fuzzy and let you sleep all at night?
And everything from payment for order flow to all the exchange fees to everything is just, it's really bad. And, I know customers do see some benefit from some of this, but really it's a few of the big players putting their hand in and taking a big portion of the cookie out of the cookie jar. And I don't think it's a good thing.
I heard a statistic not too long ago, and maybe you guys can clear me up on this. 80% of trading is occurring, not by human beings. I mean, does that sound about right? I mean, by these
stocks for sure.
Stocks,
for sure.
Yes. Okay.
Yeah.
I mean, isn't that alarming to some? I mean, shouldn't that alarm some people that regulate this stuff? Okay.
Yeah.
All right.
The problem is, Tim, here's the thing. All right, we get the four of us in a room. You, me, Mark, Mike, and you and I understand the financial markets. Okay? You know who doesn't understand the financial market?
Regulators.
Yeah. So therein lies the problem. Okay? Is we've got a regulating body that doesn't know what we do.
Yeah.
All right?
Now, Tusa, we're all obviously inside baseball here, but you talk to a lot of regular Joes who are coming to you looking for you to hold their hands and guide them through the world of options. Does any of this ever come onto their radar? Do they hear? I mean, I know we see it a lot from our audience on Options Insider, but we have a pretty hardcore audience. What about the people who come to you guys? Are they concerned about these types of things and about liquidity, fragmentation, being able to get good fills, the plight of liquidity in options, or is that just too inside baseball for them?
It's a little bit on the inside baseball side, I would say. Most of the time, and the reason I'd say it is because of firms like Options Express that make it very easy. In that, for most people on the retail side of it, if you go in your Options Express account, and there's other firms too, don't get me wrong, but obviously I'm partial to Options Express. Every trade I've ever made my entire life has been through Options Express or Brokers Express. But with that, if you just look at the bid-ask quote on an Options Express website, it's very narrow, it's very good, and you can see the depth of the market by using the tools. Don't get me wrong, the different exchanges, but to the average retail trader that's just looking at the quotes, so long as there's enough at what the price that they want, that's really all they care about, at least from my experience.
I guess that'll be the wake-up point for a lot of the retail customers then, is when these quotes do start to widen out, because a lot of the independent liquidity providers are just gone. And all that's left are the large firms who have backroom deals with every order flow provider. And so then, of course, then they are the only game in town, so they can trade whatever they want.
The person who's going to notice this stuff first, that, talking to, you and I both in the last 24 hours have had conversations with the CEO of Options Express. And one of the things I was really impressed with by David Fisher was, the way he kind of said, we're out to protect the customer. And, there's other firms that say kind of the same thing, but then they go and sell like you said, sell your order flow to the highest bidder. And the customers of these kind of cut rate brokerage firms are going to start seeing some really, really shady stuff happen with their accounts in pretty short order, sometime in the not too distant future.
It is, and OX has been for 10 years now. Options Express has been a flower of light in a field of darkness and that type of thing, and the cream rises to the top when bad stuff happens. And if this does go through, I think it's gonna be good for Options Express.
I like that.
Absolutely.
Flower of light in a field of darkness. You're getting poetic on us, Uncle Mike.
Okay, I stole that from a Johnny Cash song, so I must.
Nice.
I'll say maybe we're rubbing off on you a little bit. All right, and with that extended edition of Exchange Bingo, we
should call that Angry Rants of Former Market Makers.
With that angry rant block, we will close out that section and move right into the odd block.
It's a flower of light in a field of darkness, and it's given me the strength to carry on.
The odd block.
Welcome to the Odd Block. This is the section of the show where we discuss the interesting and or unusual, and some might say darn right sexy activity that we're seeing in the options market today. At least Tusaw would say that. I don't know. I don't know if I would say that myself.
You don't describe options as sexy? I do. You'd be surprised that it'll definitely turn people's heads.
Yeah, look at all the sexual innuendos, straddle, naked. It's something to where this was obviously invented by, well, never mind.
I suppose it's a lot sexier than a hog future, I'll give it that. All right. We're going to start things off with AMD Advanced Micro Devices. They closed at $9.44, up 45 cents on the day. This is the name that does 22,000 contracts a day. I think that number actually is pretty substantially inflated given some of the recent activity. I think the actual ADV is actually much lower than that. And today we saw them doing over 65,000 contracts. And what's driving this is actually takeover rumors lurking around AMD. And some of our regular listeners will remember we discussed AMD probably about a month ago on the show, right after their CEO stepped down in the wake of the Consumer Electronics Show, and the company seemed to be in free fall, and the stock dropped from 9.5 or so all the way down below 8, and then down into 7.5 range, and it looked like it was threatening to break below 7 for a while, and it seemed like AMD was just listless, and there was a lot of talk about what was going on with the firm, what their future was, and it seemed pretty dire. We saw a lot of interesting bearish activity coming into them for a while there too. But, of course, the drop in the stock price has made them a tempting takeover target now. So we're hearing a lot of rumors bouncing back and forth about different firms coming to gobble up AMD. The latest, and maybe you guys have heard this, and maybe I'm curious to see what your opinion is on it. The latest rumor is that Dell is going to buy AMD. And when I heard that one, I had to kind of just stroke my chin a little bit, and that makes absolutely no sense to me. I have no idea why a consumer manufacturer would want to bog themselves down with a chip manufacturer, but maybe that makes sense to someone.
First off, somebody here called the absolute bottom of AMD and suggested buying some 8 calls that are now we're up 300%. Not going to say who, I'm just saying somebody.
I think we were all bullish on AMD when it was like 7.5. You got to.
Yeah, I think everybody was. You got to be. But the basics of it came down to here's the only argument, and I know it's a terrible idea. The problem is AMD does more than personal computer chips. Okay, Dell doesn't do a lot of does Dell do a lot of mainframes and kind of high end computer work?
They do some, but the bulk of their business is still, I believe, consumer desktops and laptops.
Yeah, how much cost savings do they get by internalizing that chip flow?
I don't know. They want to actually have the whole construction, manufacturing.
Vertical integration, I guess, would be what it would be, right?
Those massive. I mean, we're seeing companies spin off those manufacturing fabrication facilities in like Taiwan because it's just too expensive to own.
Well, you can still, but if you own the chip technology and if you have any, I agree that it's a terrible idea. I'm trying to take the devil's advocate here, by the way. If you can get the researchers that developed such great things as the Hammer chip, maybe that gives you an edge and some differentiation from every other Intel chip out there.
Yeah, I think the one bright shining spot
of area there, right?
The one bright shining spot of AMD that might actually be interesting is they do also own ATI, which is the graphics card manufacturer, and that obviously NVIDIA has had their earnings recently. They are the competing graphics card manufacturer. They're lighting up the tape these days because of their developments in the GPU side. So maybe picking up ATI would be interesting for them. They could do some of their own processor and maybe make their own tablet with their own processor in it, something like that. That might, I guess, be interesting.
So what I'm saying is you could maybe make a case that for some sort of vertical integration. Do I love it? No, but who knows?
He is on the record, ladies and gentlemen. Mark Sebastian loves this deal, and he recommends all of you go out right now and support it in any way possible. I actually looked at my numbers were even more premature than I thought. The actual total daily volume today was actually 107,000 contracts in AMD. They did another 40,000 contracts since I initially looked at that, and it was a 3.1 to 1 call to put ratio. So it seems like Sebastian and I are on the losing end of this one. The bulls are out in force in AMD right now. There's an even net positive deltas of 315,000 on the day in terms of what we saw.
I rolled my 8 calls I used the 8-10 call spread to reduce my risk and to stay long. That was the way I was looking to approach this type of movement.
I think a lot of people
that's a smart way to do it too.
I think a lot of people were doing that because we saw a lot of activity in Feb today, which is interesting with one day to go. I think a lot of people were rolling those out.
A Feb March roll, a March roll, a March April roll. Yeah, it makes sense.
We saw about 8,000 of the Feb 9s go up today, 5,000 of the Feb 9 puts. Those are all pretty much stock plays at this point. A little more interesting in March, we saw well over 8,000 of the March 9 calls, and this number could be low too by the time I check the end of the day numbers. The bulk of this actually was the March 9. I'd say most of the size activity on the strike. Roughly a third of the sizable trades hitting bids on the strike. Same thing with the March 9 puts, the bulk of them being purchased. So there was some bears out there, but overall it was definitely bulls running the day. No large spreads or other blocks that really caught our eye. Aside from that, just an interesting name to watch. It sounds like a ridiculous rumor to me, so we might see this thing moving right back down again pretty quickly. If you're looking for a volatile tech name, a little bit cheaper than Apple that has some volatility to play in, AMD might be an interesting one to play in right now. And then to close out our abbreviated odd block, I had to add Mark Sebastian's favorite name of all time. When I saw this one coming across our tape today, I knew I had to put it in the show. That is, of course, Chico's.
Chico's! My favorite.
Sebastian buys all of his clothes there, even though it is for a middle-aged woman. He still finds good stuff. It's surprising. And this is the name.
They make a good set of wrinkle-free slacks for women that, if you can learn how to button up your shirts the opposite way and how to zip with the left hand, there's nothing wrong with women's clothes, and they happen to fit my hips very well. So, I've got that standard pear shape.
Hey, I've had some conversations with Sebastian on this before. Don't go any deeper, guys. You're going down a road you don't want to go.
Don't ask questions you don't want answers to.
You don't. Trust me.
This Chico's closed at $12.45, up a dime on the day. This is the name that does. I think recent activity has inflated this one a little bit too, because their average daily volume is listing around 4,000. That seems a little bit high for this name. They did about 3,000 today. But what's been moving this name actually has been a lot of some potential takeover interest. We're seeing bullish flow dating back actually to last week in Chico's. It started last Tuesday with some interesting some opening buyers in the March and May 13 strikes on the calls. That continued into Wednesday with about 6,000 of these calls going up, and 6,000 total calls going up on Chico's, and only 140 puts. So serious call to put ratios going up on Chico's on Wednesday. And the March 14s, these are sizably out of the money calls. They were very active as well, about 2,500 going up on the day. The bulk of them buys. March 13s and Feb 12 half calls also saw buyers coming in. On yesterday's volume, the bulk of it was 83% on the ask. So people are lifting offers on calls in Chico's right now. So, yeah, who would? I open this one up to you. I know this is one of the few names that you really love and cover on a regular basis.
They've been wiping the floor with Talbots and with Ann Taylor. And I think that's because I think their price point is just a touch lower than Ann Taylor and Talbots. And their styling is on par. And it's like, why would I go spend $100 on a pair of khakis from Banana Republic when I could go to Express across the street and spend $60? I think for the same pair of pants, same quality. I think Chico's has kind of found that niche, and that's working out really, really well for them. Great styling. Ask my mother-in-law; she loves them, and at a really reasonable price. So. There you have it.
I told you, the man knows his Chico's, ladies and gentlemen. I think
that was also one of my favorite shows from the late 70s, early 80s.
I think that one predates
Chico and the Man.
Even you, sir. I think you should rename the website to ChicoPit.com. That would be
I like that, Chico'sPit.com.
So, yeah, anyway, bulls out in force in Chico's these days. It looks like people are banking that the takeovers are going to happen.
Well, who buys Chico's, you think?
Who was the private equity group that just picked up either Dollar General or Family Dollar, one of those two? I think that same group might have been sniffing around Chico's as well, and that might have started this takeover speculation. So with the Family Dollar deal going up now, maybe that puts the kibosh on the Chico's deal. But if that was the same firm, I believe it was, but I'm not certain on that. Like I said, I don't trade women's retail clothing that actively.
At least not in the markets.
No. In the privacy of my own home, it's another story in general. With that, we will close out the old odd block and roll right into the Express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the Express/spread block. This is the section of the show where we all sit back and we just bask in the brilliance that is T-Knob. And we allow him to
T-Knob in the hizzy.
Fill us in on what's going on.
Well, you know, when you said that today was a little bit of boring, you didn't use the word boring. You just didn't seem so excited about today's trading. I feel a little differently.
Ooh.
And that's yes. And why is that?
Fighting word, sir.
That's because the commodity markets are on fire
Shut
today.
up, sandwich. I'm ready for pickup. I got a shut up sandwich here.
So yes, our big one today was cotton. Cotton and silver were some of the big movers today. My quotes here, they might be a little bit stale, but I have cotton over 3%, silver over 3%, rice over 3%, corn over 3%, and looks like I had about soybean oil was right around there too. I also had some of the other big movers were coffee, soybeans, so a lot of the foods. Cattle was up there, wheat was up there, oats. So a big day in the commodity markets today. One thing I wanted to mention here real quick was since they were a lot of foods, I thought that there were some food ETFs I would share with you. Food commodity ETFs, MOO. Okay, that's one. FUD. This one is a new one to me. I haven't had too much time to do too much research on this, but I did get some of these symbols. So MOO, FUD, JJA, and then DBA. Those are some ways to play commodities, the food commodities in the ETFs.
FUJ, fudge?
FUD, like David.
Oh, FUD.
He's hunting rabbits.
So I think I'm going to do a little bit more research on those so that the next time I come on I can have a little bit more to say about them. But that was just an article that I had read with these ETFs. We were quite busy today, so I just kind of wanted to bring those down and share them.
I do have people in MOO on the short put side of it. I like MOO. It's a great ticker symbol. And it's just one that it's kind of a one with which we're playing I'm not comfortable getting into the stock outright by just buying the stock or the ETF, I should say. But I do feel comfortable selling some out of the money puts against it. And we've been doing that. We've just been kind of chasing it up, so to speak, by just selling some pretty far out of the money puts. You can get some decent premium on it. And if it were to pull back, I'd feel comfortable owning that.
Very nice. There's another one, COW.
Not familiar with that one.
COW.
Yeah, that's another
even better ticker symbol.
Yeah.
That is a better ticker symbol. COW is the iPath Dow Jones UBS Livestock Sub-Index Total Return ETN. And it's, it doesn't have a ton of volume, only about 100,000 shares trade today. But,
these do have risk. And liquidity is, I think...
it's on a tear, though, I'll tell you that much. You are right, Mr. Nababi.
It's on that list. Yeah, so, I like these ETFs. I think they really do offer a good way to play some of the agricultural commodities and, food commodities, which seem to be starting to, gain some news now these days. But, again, they do have risk. Liquidity is being one of them.
I think these are interesting. I would be terrified, I think, to dive into the options on cow, even though it is a great ticker symbols, because I could imagine all the guys in these futures pits would just be all pick off paper, and all the few contracts that do trade in options is all guys laying off something from the actual futures. People who actually know this stuff and know the paper pretty well. The few guys I know who've tried to transition from SIBO floor into like hog and other meat futures, I've said it's an options. It is a rough transition. So I'd imagine these, whatever they did, I think they did 140 contracts. That's a lot of, I would imagine, quote unquote, pick off paper going on up there. But interesting, if you want to take the long position just in the ETF and ride it up, that's a safer way to go. If you are indeed long cow or perhaps moo.
Yeah, when I looked at some of these options, I think Mike has the smart way to play it. They don't, really excite me to, want to get in and go long on any of these because of liquidity and volume. But, I think it's good to start to put them on the radar, and, maybe take a position in the ETF or a short put position. And that's all I have.
Mike, do you find it's easy to get done in moo, or is it something you really have to kind of hit bids and lift offers?
I've actually been okay with splitting the bids and offers on moo, and this is one to where I usually let them expire worthless. This is one where if we get in, get out, I wouldn't feel comfortable just getting out of. This isn't one that I would trade that actively. This is one where I put on the put, and this is one to where we're just going to let it expire worthless and start over again come Monday.
Yeah, you almost couldn't close it out. It's too pricey. The spreads are just too wide on these things.
Yeah, and I'm fine doing that. Just because of the fact that I'm fine owning the underlying if it does go to that price.
I don't know anyone myself personally who has taken any of these positions. So you're the first person, Mike. I know I've taken some orders from some customers. They seem like they're, dipping their toe into, something they really don't know how deep it is. And they're somewhat satisfied, but I'm interested that you know about these, Mike, and I think that's real good. I mean, it's real nice to hear, actually.
I agree.
That you do these for your customers, because I bet you probably have some people, calling you up on these, or maybe have some interest.
You got to have diversification, in my opinion, and just putting large cap, small cap, mid cap stocks. I mean, that's not diversification. It's
right.
I think you need to have commodity exposure. I think you need to have a lot of different exposures. So,
I agree.
With these
Although the
things
last time I had an exposure, I got arrested.
We got to have a lot of
Jesus incident again. Are we talking about that again? I told you to stop going back to that store, but
well, me and the mini metals were out partying, and next thing you know,
one thing leads to another of those guys.
They're a terrible influence. Those mini metals.
Hey, Mike, real quick, I have a quick question. Have you brought these to your customers' attention, or did people come to you?
With Moo, I brought that one to them.
How open were they? Did they like the idea of them?
Oh yeah, they loved it.
They did like it. Yeah, they were positive.
Yeah, it's one where a lot of advisors, if you talk about diversification, like I said, a lot of the time it's just different sizes of stocks. Well, granted, maybe the Russell's going to outperform the S&P. Who knows? But bottom line is in 2008, it doesn't matter whether you were large, mid, or small cap, you lost money in all three. So I think by having at least some type of commodity exposure or just anything, I think that's the way that it's a smarter way to have diversification. Not that it's for everybody. Every client, every person is different, but I think that this adds a type of diversification to a portfolio.
Well, and it's nice that you're bringing your clients out away from just the kind of ubiquitous cruddy oil ETFs and stuff like GLD and SLV, and actually exposing them to some of the other, the other things out there. I think that's a real value, and there aren't enough people kind of using that to our advantage.
Well, I appreciate the kind words, Mr. Sebastian.
Well, if I wasn't afraid of you slapping me over the back of the head, next time I saw you, maybe I wouldn't have said it, but there you have it.
There's fear in the market right there.
You're not violent. Everybody knows.
I have a basic natural shyness.
You do.
He was the least violent guard in the NFL. That was his undoing.
That's the reason I'm not there anymore.
He kept shaking hands with the nose guard. Didn't work very well.
So I've been trying to think of a good song to be kind of like an entrance music for Tim Navabi, just because I'm
scared where you're going with this.
Everybody. Well, the closest I finally came up with something. What do you think about this? Navabi, oh, cantare, oh. What do you think?
All right, we'll have to record that and just cut that bit out. That'll be Tim's entrance.
I like that as an entrance theme. What do you think? So
I'll think about it.
All right.
We can set it to music. It'll be something. There we go.
That'd be awesome.
Maybe like a reggae beat or something weird. I don't know.
I like that.
And with that love fest, we will close out the Express/Spread block and roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on our horizons for the next few sessions. And we've talked a lot about various names. In terms of economic calendar, there really isn't that much left for the week. We saw the big announcements today with consumer prices and, of course, jobless, and both of those were a little worse than expected, so that sent the market into a bit of an early tizzy, but they kind of rallied from that quite a bit. In terms of our own perspectives, we talked a lot about the earnings names coming out, and we talked recently about Activision, and we've been watching that one for quite a while. They had earnings last week, and this is the name that we've been waiting to get back down to that 11 range for a while. We've actually traded this quite actively over the past year, often in a lot of bullish risk reversals where we're short put somewhere around the 11 strike and long calls up around the 12 or 13 or 12.5, wherever the underlying is trading at this time. And we've been waiting for it to retrace back to these levels for quite a while. And we were actually short the Feb 11s, which worked out fairly well going into earnings, even though it appeared like it's going to pin for a while there. But we since have rolled that and legged into the Feb March 11 put spread, and we're liking that one as well. If you look at this one, it's fairly range bound, and it does have a fair bit of support at the 11 strike, even if it does dip through that on occasion. This is the name, like Uncle Mike and his Moo, this is the name that I don't mind owning below 11 if it does go down. This is the largest publisher of video games in the world, and they make some of the biggest names. You know, these multi-billion-dollar sellers come out quite a bit from them, and they have internal issues lately, but their portfolio is strong, and this is a relatively historically decent level to get into them, and we've done this in the past with good success. So we're eyeing this one again. That's probably one of our largest watches. We also just closed out our position in NVIDIA. They had earnings yesterday, and they worked out fairly well. They rallied to the upside, and we had some short put spreads on the downside in NVIDIA. That was another one we were a little bit worried about because that's a stock that's pretty much doubled in the past month and a half since the Consumer Electronics Show, and so we were a little worried there might be some serious downside if they didn't really blow the analysts away. And it turns out they came in pretty much in line, a little bit better than expected, and so they managed to hold on to that sky-high valuation that they have right now, and our downside put spreads paid off pretty well. So that's kind of what we're trading right now. And I'm actually looking at Radian. We've talked a lot about Radian as well, and that's one we're looking at as well. And that one is hovering at 7.5. So everything we have this month is wants to pin for whatever reason. I don't know what it is. We're just pinning across the board. What are you guys looking at this for the rest of this session going into expiration?
Not necessarily going into expiration, but one thing that I'm noticing right now, natural gas itself, it's pretty low on a chart. So whether this is the time to get in or not, I don't know. But from a technical perspective, I want to see it come up a little bit before I would get any exposure on the commodity side of it. But the other thing that I think is going to be pretty interesting over the course of the next week or two, there's some natural gas stocks with earnings coming out. So it's definitely natural gas is something that I think it's something that needs to be watched right now because we're at a pretty key point from a technical perspective, as well as the fact that we have a lot of energy stocks or natural gas stocks in particular that have earnings coming out over the course of the next week.
Couldn't agree more. The thing I've been paying attention to is the VIX. All right, now the VIX cash kind of a piece of garbage. I think I've kind of talked about that in detail, but It can, as kind of a standalone, this is what volatility is doing. Some weird things going on, though. We had the VIX cash down. We had every single future up across the board in the VIX. And we had the long-term futures not up as much as front-month futures. We saw several of the some of the other volatility indexes up significantly. In a market where we're flat to up, I feel like we're kind of at a floor for volatility. I think over the next week we're going to see at least some sort of uptick in implied volatility with possibly a test maybe off of 13 as we get toward 1350. We kind of start testing 1320, 1315 before we're able to kind of pop through. But I get the feeling like there's a lot of friction on the upside right now in the major indexes. There's a lot of friction on the downside too, but I'm just feeling a ton of friction on the upside, and volatility is kind of echoing that. And so I'm not exactly sure where it's going to go, but I definitely am not loving a very short-term bull play. Long-term, I'm a bull. Short-term, I'm not loving the bullish play right here. So that's kind of what I'm seeing.
Speaking of loving the bullish vol, are you still loving the vol and Apple?
You know what? I am, especially with the jobs rumor that was out today.
Yeah,
the cancer clinic. Yeah, I saw that.
Pictures of him at a cancer clinic, which that's going to kick that vol into high gear a little bit.
Yeah, we've been in this trade for 10 days, and it's supposedly think about this, Mark. We've been in this trade for 10 days, It's only $3 away from the strike. Okay? It allegedly has a theta. The straddle allegedly has a theta of 32 cents a day. It's lost it's lost about 10 cents. That's how much fear there is in the market on this Apple. It's really growing. You basically had a free move. And actually, if when we got up to 363, you sold some stock there, you would be winning right here. So, gamma scalpers are winning on the Apple straddle. Those that are just holding it are losing.
Well, that's always the way with straddles. Hence why retail gets burned on them so often. They don't really. Gamma scalping is usually a little bit out of their range.
Mm-hmm.
It's interesting. We're getting a lot of calls and emails about, trading Apple and how to trade Apple. But, the feedback we're getting a lot is that it's still just too rich for a lot of people. They can do one lot of these straddles, So they're trying to find ways to offset that premium. A lot of people are writing into us saying, hey, maybe like an iron butterfly around this 355, 360 level. I don't like that, and especially to the upside. If you look at maybe if you want to use the downside puts, and so you have maybe the 355, 360, whichever strike. I think you're talking 360 is the strike you were long before.
Yeah.
Straddle. 360, and maybe you look at the 345. 355, but nothing to the upside is worth writing. So if you're gonna do that strategy, I would do a broken wing fly at the very least, and just leave the upside naked. Because what are you gonna do? Write these upside calls for $1? It's not worth it at all. The amount of premium you're getting back is not going to offset any of your other costs at all. You're better off either doing the straddle and hedging your gamma, or, doing it maybe with a little bit of a downside put component too, and taking some of the money off the table that way and still having enough room for this thing to run. But yeah, if you're worried about jobs, then maybe you don't want to do the downside put area either, because this thing could run down to the downside again. We could maybe test the 320s again if Mr. Jobs is indeed as dire as they're saying.
Yeah, it's real interesting. My thoughts as far as Apple when it comes to that is you basically have to you either have to pick a direction or you have to trade the volatility. I don't think it's a great non-directional trade. I really don't. That's been my experience with it, at least.
Yep, go along the one lot and see what happens to you. All right. Mm-hmm. And with that sage advice, we will close out this episode of the Option Block. I want to thank my usual cast of characters for joining me on this episode, starting off with the man from the mountains himself, Uncle Mike Tusa. What is going on at Know Your Options, Inc. this week, Uncle Mike?
Well, coming up on Tuesday, I will be speaking on the ISE's website. We're doing a webinar at 3:30 Central Time, so a half hour after the close. It's going to be on natural gas. We didn't actually plan it this way, but natural gas was kind enough to do everything that I described a little while ago and have earnings coming up next week in various stocks. We'll be talking about the new ETF that the ISE has on natural gas stocks, trading natural gas stocks, as well as trading natural gas itself. So for more info on that, go to ise.com and sign up. We'd love to have you there.
Tim, what is going on over at Options Express these days?
We have some webinars as well. I would be excited to listen to Mr. Tusaws because I think he's always a very good presenter. But if you are into webinars and some events at Options Express on our education tab, we do have a list of events. Some of them, for example, these are sort of in the future here. March 1st, Why Smart Money Trades Futures. 2/20, so Feb 20th here, we've got the case for the covered call. We've got one on the 21st about calendars and diagonals. So those are some of the near-term exciting events that we've got going on.
And, of course, don't forget Mr. Sebastian's ChicoPit.com, or as it's actually called, OptionPit.com. They have a lot of good seminars and classes there for all of our Option Block listeners to take a look at. And I also recommend all of our listeners give us a call at that voicemail, 312-544-9356. And, as always, surf on over to theoptionsinsider.com for more of the unusual activity, as well as the breaking options news and other material that we didn't have time to cover on this show. There's quite a bit of it on the site, so surf on over to the Options Insider and get your fill of that info, and we will see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.